How's it going?
Hey, what's up, Joe? And gold?
Pretty good. Just trying to figure out this echoing issue. Uh, yeah. So I guess we're always just voice chat in Discord and then stream via YouTube. Is that how we're kind of set up?
Yeah, pretty much.
You can record that way, I guess.
Um, the only thing that sucks is because there's a lag. So like if you're watching a video and you're hearing my voice on Discord, then there's gonna be that lag. I believe that's the way it works. Whereas
I
if
kind of like it because it gives you a sec to take in what you said, and then I look for the screen and watch what you just said. So it's kind of useful for me.
it works out.
Yeah, it's like gives me 3 seconds to process in my brain what you just said when it's like super technical or whatever.
Until you open both at one time and then he's talking echoey and you're just like blows your mind.
Yeah.
Also, you have the audio. You had the audio going on the YouTube video as well.
Yeah, I accidentally. Second.
Ah, I see what you mean.
This is wrong with my computer.
Yeah, I'm not sure.
Hey, got it.
Who was that? Oh, it was Rock. What's up, man?
No much. My mic wasn't working last time, but glad it's working now.
Ah, okay. I got you.
Will we be able to do a quick recap at the beginning here? I mean, I've gone over all the parameters all day long. I'm still a little bit off.
Yeah, I got you.
All right.
I was about to say something else, but I got so thrown off by Rock coming in. I don't know where I was going with
It's like a rock and roll.
Oh, what was it about? Has something to do with the stream and the audio. Let me think. Oh,
The
wow.
numbers are way clearer, by the way, today. I don't know what you did or if there's a setting, but the numbers are like crystal clear.
Yeah, so actually, what I did was my screen is 4K, and I was trying to stream in 1080p or 1920 by 1080, and it wasn't coming out right. So instead, I'm basically, how do I have it set up? Basically, I made the resolution 1080p and the output 1080p, so like they're both the same. And so what you're seeing is actually just like a portion of my screen, but as a result, it's like super clear.
It's super clear, like crystal.
Sweet.
I think with the 4K thing, it was trying to cram like 4 times the resolution into a smaller one, and that's what was creating it being fuzzy. Like it was almost like reverse potato.
Yeah, and I thought I couldn't stream 4K on YouTube, but I just found out I actually can because I had the latency set to like ultra low, just to reduce any lag. But turns out you can't have ultra low latency with 4K, so I would have to set it to normal latency. And I know that there's already, probably a couple of seconds of lag on y'all's end, so I don't want to add that additional latency just to show you my full screen when there's really not a point. But let me go. Go ahead.
Sorry, just want to say while we're getting set up and everything that I managed to watch the Way of the Ninja one today.
Nice.
I've just finished like notes on it before, but dude, that one's like, that's bringing everything together. Like the old information that was missing, it's like bringing it all together.
PowerPoint did some work, man.
Dude, it was like really succinct and clear, and yeah, it's absolutely wicked.
Sweet, it's good to hear. That's kind of was definitely my goal with it because we have been moving extremely fast, and I just wanted to kind of have a session to take a step back and kind of see what we're trying to do here. I think I'm gonna keep these sessions up, for the rest of the week, and have a session on Saturday. But then next week, probably gonna take a week off from the sessions, allow everybody, and of course by that time as well, the group is going to be cut down, basically in half, which won't really seem like a difference because everybody that's going to get cut are the ones who aren't even saying anything, haven't done the project. They're just kind of, I guess they just kind of joined, and then I guess something didn't fit right with them. Because honestly, all the people who aren't participating are the ones who haven't even gave anything a shot. But that's just the nature of people. So I'm just happy that it looks like we're going to end up with just half, which is 20 people is plenty to work with.
Yeah, I feel like there's always people that will join, be like, can I grab any alpha from this, other people's ideas, and then dip.
Yeah. Well, I had a lot of people that, I remember I had several people they'd ask me are you doing Forex? I'm like, no, I'm doing futures. And they're like, oh well, to come up with some random stuff, and I'm like, well, futures has Forex. And they're like, what? I'm like, so right off the bat, you're just indicating that you don't even know anything about futures, and not even willing to maybe ask what it is. It's just people who are extremely stuck in their ways, I guess. And I explained to one guy to just join one session because he was talking about he only wants to do Forex strategies, and I'm like, you can literally connect a Forex broker to NinjaTrader. Every single thing I talk about, because I'm not saying y'all have to trade futures. Y'all could easily connect a Forex broker to NinjaTrader or a stock, to do stocks or whatever. And I mean, making strategies works across any market. So and I was like, just join one session, see what's going on. So dude joined the first session, and within 2 minutes, where it's basically how this session was, we haven't even started talking about anything important yet, he just left and just left the whole group. I'm just like, I don't understand, dude.
Yeah.
I guess he just hated my voice that much. It just disgusted him. He just ran away. A lot of people have been really intimidated by switching platforms as well, which I kind of understand. I remember when I used to work on Thinkorswim, I love TOS, and I was really hesitant to really try anything else, but eventually I did. I'm pretty sure I've worked on, every platform now. The ones I have the least experience, well, really the one I have the least experience with is TradeStation. But I have it installed right now, and I've worked a lot in it. But that's the one I have the least experience in. Actually, it's one I haven't worked in. I've never worked in Sierra Chart. I've heard good things about it, but I haven't heard good things about it regarding from a creating systems and testing systems standpoint. Usually, the best software for that is multi-charts, which...
Is that MT something or other?
Say it again?
Is that what people refer to, MT something or other?
Oh no, you're talking about MetaTrader.
I've heard that's kind of bad because they don't merge the different contracts together when they update. So your levels basically change. Accurate.
I'm not really sure if they merge them or not. I might.
I like Ninja. Yeah.
Say it again.
I said I like Ninja. I think it's a great class, and it's so many people want to step one is build their own backtester, and you're just like it's not the problem you're trying to solve here. You know?
Well, yeah, I mean, I think that's really for a lot of coders. Like coders love to kind of they just love to code, to be honest. And so they're like, what can I code next? And then maybe they build something to backtest with, and instead of actually like diving into the world of backtesting, they say, oh, okay, well now I want to build this. And like they're always building stuff. But I mean, that's just what they love doing, you know. So you can't really blame them, you know. I mean, you're a coder as well, and if you're at any proficient level, then I mean, you gotta love doing it, you know.
No, it's true. But there's always two different types of coders. There's the system builder people that want to build the best pipeline of stuff, and then there's people who want to use code to solve the problem. And it's always difficult to get the first kind to focus on the goal. It's
Yeah,
a pretty common problem among engineering for sure.
I can see that. The
I
only
didn't even know Ninja Trader, like this kind of thing existed. I joined the Reddit. What was the subreddit? It was Algo Trading or Algo Traders,
Mhm.
and like you were just saying before, literally everyone's like, don't use anything off the shelf, build your own. And I'm like, I don't even know how to code. Like I'm just completely lost. And then I find this with Ninja Trading, you're just clicking, and it's done. And it's spitting out trading systems in 10 seconds. I'm like, wait, what?
Yeah, I mean, the algo trading on Reddit is filled with a lot of programmers and coders, um, and a lot of them really think that just you know kind of in the world of complexity that they need all these additional tools, and that's what's holding them back. Whereas, I mean, you got you know Jimmy down the street just scalping the opening range and making a living, you know.
Yeah.
I'm not saying there's anything. I mean, there's definitely, you know, if you're as like a senior level Python dev, you know, and you can just, you know, build anything, then like that's awesome, you know, and like by all means exploit your skills, or at least get paid for them at a firm, because like firms are literally always on the lookout for senior Python devs. Um, in which case you don't even have to trade. You can just get paid 400K a year, um, to just you know code stuff for other people. But in really the realm of trading across, I mean, in any like, because there's so many different ways to trade, but almost everybody overlooks some simplicity and the effect that it you know can potentially have, whether it's an algo trading or discretionary trading or just
I think
anything.
I think at this point in the history of the world, there's probably alpha back in the basic stuff. Like if we got machine learning and neural links and all this kind of stuff, it's like just buy the break. They're like, no, we can't do that. There's no edge in it, and it's almost like
Yeah,
a cycle. Like at
yeah,
this point,
I see what you mean.
but everyone's trying to look at patterns of data of like 10 terabytes a second, and then someone's looking at some old farmers looking at the weather, being like, oh, it's going to be a bad year. Just buy corn.
Just buy corn.
Yeah, and I know a pretty good trader on Discord that kind of watched him trade over the past year or so. And he's basically like, I'm like a crow. I can't even describe what I do. I just have like a few patterns and I'm like execute really well on those patterns. And it's almost just intuition. Like, I don't think I could get someone to code it up. Like, it's just, and so you just kind of, he just reads tape and looks at the tick indicator and then just rocks and rolls, man. Kind of crazy. His entries are insane too. So, but yeah, I think a lot of people don't value intuition
For sure.
as well as just like
There-
simplicity.
There's a really interesting paper on intuition. I'll share it to the group. It's like a full scientific thing of whether people can predict like stock markets and movements and where they're going and where they're heading, and they found that like completely off the street uneducated people, like I think it was like 74 or 75% of them can accurately, consistently predict where a stock's heading, just but with intuition alone.
Really?
It's super interesting. I'll share it to the group. Yeah, it's like a full white paper on it. I'll do it now. Actually, it's on my computer. One sec. Where should I post it?
I guess in resources and other, that'd be a good spot for it.
Other. Yeah, cool. I'll put it now.
But back to what you were saying, Joe. Like I have a lot of respect for people who trade like that. I mean, I traded like that for years, and it's like I said in the about me section. You know, I taught, how to trade small caps. That's the first thing I started teaching about, I don't know, 5 years ago now, 5 or 6 years ago. Before I went to full on algorithmic. And I mean, I was really good, and I could probably still be really good now. I mean, I think I would actually be even better now. I had trading small caps and just trading discretionary. I had a couple patterns I would look for each day. I had my custom scanners. I knew what I was looking for. Like everything was there. And the group did really well. And one of the guys that I taught from that group is actually the one that got in, because he's the one that lived where the prop firm is located in Chicago. And of course, Chicago has literally like hundreds of the trading scene in Chicago is just ridiculous. And he got on with the firm, and then he's the one that eventually was able to get me an interview, and then all that good stuff. But kind of straying off a bit, what I hated so much about that approach was just the nerves and the anxiety of waking up every day, having to perform, and I was live streaming, and so that kind of made it a little more stressful. But this is the constant nerves.
No pressure.
I mean,
no
dude,
pressure.
I'm telling you that the constant nerves and the having to keep your discipline in check every single day, taking these big positions, because I was just doing momentum plays, high volatility. Even though I knew it wasn't like, even though I was having success, I mean, a handful of times I would have a 6-figure day, and that was just amazing. But I literally felt like I was just gambling it at those times. And I knew it wasn't going to be sustainable for me long term, just because it's just, I felt like I was a really good poker player or something. Like I was making money, but in reality I was just gambling, because I wasn't basing anything off of any like real data. There's a lot of reasons why I just decided to not do it anymore, and just instead use my knowledge to systematically try to exploit patterns. And there's money to be made in both realms, without a doubt. There's this dude that me and the other guy was talking about. He met this old man that traded futures every day for a living, and all he does is he trades like just the ES, the 5-minute opening range, and he just scalps it. Well, like, to be honest, he gets some pretty big wins sometimes, but he'll just take like 5 to 10 contracts, and he has no true bias. He just waits till price kind of approaches the opening range high or the low, and just right then and there, by what he sees, he'll decide, if he wants to take a long trade or a short trade, mean reversion or trend, and doing it for I don't even know how many years, and that's all he does. And he does great. We call him old man futures.
Like that.
Crazy as well, because like you read like Reminiscence of a Stock Operator and stuff like that, and then Old Man Futures was the people doing it back then, just like the sort of people on the side who just were there and they were known for just taking like a couple takes and that's all they were there for. Like all the way through pit trading as well. Like it's just
Mm-hmm.
people make a living off it and they're happy with it and they just quit for the day and they're done.
We can all aspire to have the discipline of Old Man Futures.
Yeah, totally.
Because, I mean, to do something like that year after year is, you know, of course, I don't see all of his days. You know, he might have some big red days. I don't know. I just know that he's doing good enough to keep on doing it, and that says something. Because if you don't do somewhat good, then you might not be in the game very long. So let's see. We can go ahead and get going.
I posted that document in other if anyone wants to check it out after the stream as well.
Alright, cool. I see it. Exploring the nature of trader intuition. Cool. So, looking at the screen here, for those that missed the session this morning, I created a new baseline because our previous baseline simply wasn't enough data. So what we did for our core baseline was we took the year from 2021 to the end of 2022, so 2 years of data, and ran it across our main basket, which I still haven't added the Ultra Bond. I will be adding the Ultra Bond. It's going to be the only treasury in our main, or our interest rate in our core basket. So it's going to be 26. Normally I would do a lot more data for our core baseline, but to be honest, most of the systems I'm ever making are on like the 10-minute chart or higher. So normally I use a lot more data. So this 4-minute chart gave us plenty of data over 2 years. And so we had our core baseline. That was the core conditions that I pinned on the channel all the way up there. And we ran the ATR from 2 to 6 in increments of 1, so just 5 possible iterations. And we ran that on the 15-minute, the 10-minute, the 5-minute, and the 4-minute, and the 3-2. Well, I stopped at 3 because 3 didn't do well, and typically once you hit that threshold, it just keeps getting worse and worse. So I stopped at the 4-minute, and what's interesting is that the 4-minute gave very similar results to the 15-minute, and the reason for that is, of course, we're using the 30-minute opening range, and since it's just a level that is seen on any chart or any time frame, then it wasn't too surprising that we get similar results. I really thought the 15-minute was going to give us the best results. That would have made this whole process a lot easier. But unfortunately, just for CPU purposes, the 4-minute gave us the best results. And so this is our core baseline. And now what we're doing is whenever we look to add a potential modification, what we're doing is going to our using a smaller basket, so just a basket of indexes here, on the last 2 quarters of 2022. And I don't remember the results being this good, but I guess because this happened at the very end, but it's okay. So this is our basket of the indexes on the last 2 quarters of the 2022. So whenever we add a rule, we're looking for it to improve this basket. And then what we do to actually see if that rule wasn't just overfit or by random chance, we then see if the rule improves our baseline against our core basket. Because if it's just some overfit rule that, you know, improved our results by random chance, then it's not going to translate over to our core basket when we test it across many other products. Essentially, it's an out of sample test for our modification that we made. So we make a modification on our smaller basket just for CPU purposes, and for the purpose is that we can basically test it across our core basket as an out of sample test. So I used a lot of words there to say a simple thing. Did I confuse anybody?
I'm following. I would feel like it'd be nice to go over what the baseline is exactly for this, because I feel like I've done some testing and not matching up. I want to know what I changed. If that makes sense.
You say you've done some testing and it's not matching my current baseline?
Yeah, I think I've missed some things. So at some point.
Okay.
Or I can just pick it up if you're gonna have enough.
Yeah. So if you missed the last session, then I guess there's no possible way you could have the current baseline, right? Were you on for the previous session?
I was for part of it.
Okay. So where we are at right now, I'm just going to put these sets on the screen. I'll just open them up. That way you can just look at the video and we'll know exactly what's going on here. So in our first set, we have price close crosses above the opening range high, the ATR trailing stop. We're using the modified ATR, which you have to check. It's just a slight change to the formula. I don't want to go into that right now. So I'm using the modified ATR, and we change the period to 14 because that is the default against most platforms. And I like to keep everything as default as possible, as once again another aid against overfitting. So we have the trend plot equals +1. Have a simple time filter from 9 a.m. to 4 p.m. which, forgive me, for as long as I've been trading, I always get the market close time mixed up. I think it's 4:30, but hell, it might even be 3:30. I always freaking forget the market close time. But 4 o'clock, I think it closes at 4:30. In which case, I don't want a position to open like right before the close. So 4 p.m.
Like what? It's 2:50 is Central Time is when the murder algorithm.
Say it again.
I said it was like 2:50 Central Time is when the murder algorithms turn on. We have the market on close stuff out there. So yeah, I think that's right.
For some reason, your volume is really low. I have trouble hearing you.
Okay, I'll speak up, but it's not.
Say it again.
I said, I'll speak up next time.
Okay, cool. I mean, it sounds like you're talking normal. It just sounds like I guess your volume is really low. Like I don't know how what your setup is, but so 9 to 4 my time, Chicago Central. And we're entering long 2 contracts. In the next set, we have our in the money stop, so to speak. ATR trailing stop, check the modified ATR, change it to 14. There's our user input, trend equals -1. Then for it to be in the money, unrealized P&L needs to be greater than 0. Exit long quantity, because we don't know what position size we're going to have at that time. In our next set, we have our initial stop loss, which after running some variations, we're using the adaptive Laguerre filter to add a little bit of lag to our exit. That little bit of lag did not improve our results. Or actually, I think it did whenever we used the opening range low, but then we got even better results whenever we introduced the lag to the midline. And of course, we went over in depth why these things, might help our strategy. And it turns out that they did. So adaptive Laguerre, plot on the chart, period 3, cross below the opening range midline. And once again, exit long position quantity. The way you do that is you go to set, go to strategy, current position size, position.quantity. And our last set is our scale out condition as of right now, which we're going to be looking to improve on this session. We have to check for a few things. So current market position equals long. Position quantity equals 2. Bars since entry greater than 10. We tried 3 potential variations. We tried 5, 10, and I think 20. 10 was good. And then unrealized P&L is greater than 0. And then we exited long. Exit long 1. It has to be just 1 because this is a scale out condition. And so for those who missed the previous session, just real quick, let's see if I have this illustration. Yes, I erased it. Nope, here it is. So the reason why we made this scale out condition is if we enter right here, I'm going to use a different color just because I'm going to illustrate it a second time. So we enter here, there's mainly 2 potential outcomes that could occur. Let's see. So we actually have a live stream chat now. Rock. There's a live stream channel.
True, my bad. Well, you saw my note, right?
Yeah. And so
Go on the live stream chat.
there's people were getting some different results for the project 1 as well. And I haven't made it a priority yet to figure out why. my first assumption is I know that NinjaTrader downloads data based on your time zone settings, so that bars will have different timestamps, and then if you change your time zone, the data needs to be erased and then re-downloaded to get proper timestamps on your candles. So that's my initial thought to why the results might vary some. But honestly, I don't know off the top of my head. But definitely
That makes sense. Yeah. So for my results, and I hear a lot of other people saying similar things. It's not so some of the products are off, but the overall results are only off by like 5-10 grand. So it's something very small, like a small tweak that's
yeah.
different. That makes sense. Like a time zone thing could be a half an hour in a day.
And,
So
and it might have to do with like the download frequency. I think sometimes if you don't like re-download, and you have to like you have to hit like reload all historical data. It's just like random little things that can potentially throw off results. Um, but I guess if it isn't just like major, like if something's really something's wrong, then we can make it like a serious priority to kind of figure out what might be causing that.
I have seen where if NinjaTrader is generating minute data from tick data instead of having downloaded the minute data, it can change the minute data results because it kind of interpolates.
You said it creates a minute candle based off of ticks.
You can, yeah. If you don't download specifically the minute data, but you have tick data available.
I see what you mean.
I think probably part of it is just like little things where like, not checking the ATR modified stuff. Like, if you don't have a picture in front of you, sometimes it's really easy to get things slightly different.
Yeah, there's definitely a lot of little things that can make the results a little bit different. Um, but I mean, this is my first time trying, like teaching a group, or like I guess making strategies with a group with NinjaTrader, and people are like have time zones all over the freaking place. And I know people that I've worked with, closer, or people who I've worked with in person, when they are testing stuff, it's all the exact same. So I'm just I don't really know, to be honest. It might be on my end or something. Like, maybe I need to, I don't know. Let me see what my phone. Oh wait, that's right. Y'all can't see my entire screen. Somebody sent me a DM. I don't like pulling people's DMs up on live. And people just tested my buttons, dude. Talking about testing the not doing the project till the weekend. You could like realistically, if you're starting from completely scratch, I think you could like follow the setting up NinjaTrader channel, watch the video, and like have the project set in like 30 minutes. But yeah,
There's no excuses. I had to download fucking Parallels because I've got a Mac and learn how Windows works. Trying to install MetaTrader, getting database errors because Parallels doesn't like it. Like, there's no excuses.
I mean, I don't mind extending the time period some, because really, if you even like send me a message saying like, "Hey, I can't do it till the weekend," like that's still some initiative in my book, and that's what I'm looking for. I'm looking for people who have initiative. So like, yeah, like I don't really mind extending it for anybody. And there were a couple of members that were like really active as soon as the group opened, and like completely fell off. And like I hit them up and they said that they were like sick. I'm like, okay, I mean, I'm still making strategies all day whenever I'm sick. But I understand other people, it might be a different case, you know. So let's go back to the illustration really quick. So the purpose of making this rule was if we enter at the breakout, we're going to wait 10 bars. And so after 10 bars, it's going to just get us out for a profit. So two things can mainly happen after 10 bars. The breakout is successful and we get out, you know, way up here. Or maybe the breakout occurs, it falls back into the range, it starts consolidating, becomes noisy. In which case it's just going to get us out for a small profit before it chases on down. Now I didn't test a variation where it just enters us out period after 10 bars, which means sometimes, you know, if price falls back beneath the range, then it might not, you know, bounce in our favor just enough to get some profit out. And then, you know, just end up keep on going down to our stop loss. So I do want to test out that variation really quickly to see if we just exit after 10 bars period, whether we're in the profit or not, because maybe if we take off some size, even if it's slightly in the negative, like over here or over here, then it might save us from taking a stop, you know, a full stop for our entire position. So we're going to go to our smaller basket. I'm going to make sure this is up to date with our current base. One thing to note, also for the people who weren't on the first session, so whenever we was creating our core baseline, the best ATR value was 5. However, just out of curiosity, we ran that optimization on this little index batch on this smaller sample period of the 2 quarters, and it gave us the best ATR of 2. We're still rolling with the 5 to more accurately compare against the baseline, and because we know that the 5 is far more robust when it comes to performing in other market environments. Because the thing about other market environments is you don't know if the price action on heating oil is going to occur on the NQ next month. So we need a parameter that I guess you could say is ready for everything, or as ready for everything as it, you know, can potentially be. So let's make sure that our baseline is correct over here. 120, yeah, so there we are, 120, 15,000. And so just a slight modification here to see if we get better results. So actually I'm going to screenshot this really quick. And on the builder, we're just going to take away the part where it says that the unrealized profit has to be greater than 0. We can actually copy that and put it back quickly. So we're going to compile. Let's run the test. So results are a lot worse, meaning that we're better off waiting for it to move a little bit in our favor to take that profit instead of just closing at any point whenever after 10 bars. So cool. The next thing I want to look at, which is a really exciting variation that I guess you could say I thought about earlier today, is actually, I think like the first trade on NQ illustrates all these examples perfectly. Let me see. Let me think for a second. Oh, so this is the variation we just tried, which was no good. So I got to recompile for our current variation. Okay, so back to baseline. Let's run this test. Choose the NQ. Okay. So instead of drawing to illustrate what I'm going to do next, we can see it on this chart. So we can see our, our rule really shining right here. It's just ironic that it's the first trade, to be honest, because it's really like a picture perfect example of what we would hope to happen. However, given the data and how it improved the overall test, we know that it happens enough times to merit the rule being there. But we enter on the breakout after 10 bars. Obviously we're back in the range. And then we waited to be in the money a little bit and exited. Of course, we're still going by bar close. So if it would have, wicked above, then, and maybe closed beneath our entry price, then it wouldn't have gotten us out. There's something to note there. But it got out partial position. Then when the Laguerre crossed beneath the midline, I talked a lot about the Laguerre previously, and I told you guys that there's actually a benefit. I said if we use the lag on the Laguerre, if this is a midline and here's our Laguerre and we're exiting when the Laguerre crosses, then initially you might think that you'll get out most of the time at a worse price, which might be down here instead of right here, since we're introducing that lag. But the way the Laguerre filters price, it'll keep on going down even when price is starting to go up. And what that means is that it kind of evens out the times that we exit at a worse price, because over a large sample size, many times it actually retraces and we get out for a better price. And that definitely occurred here, which is why I said it's just ironic how this is like just a picture perfect trade illustrating the things that I drew. But we see originally, if we were only using price, we would have exited here at the close. Whereas due to that lag, we got a much more, advantageous exit. And here on our last trade, when we entered on the breakout and it just closed after 10 bars in the money. So here's a potential improvement. And what I want to happen is, I love how we exited, for a small profit on one of our contracts before we took that eventual loss. But I don't like how we just instantly got out, took some profits. Whereas, if a trade really runs in our favor, we could make a lot more money if we held on to 2 contracts, the whole way there. And so the way we can remedy this is I'm trying to think in my head the best way to illustrate it clearly. So after we enter on the breakout, what we're gonna do is still wait for 10 bars, because remember there's two outcomes. There's the big run up and there's the fake out, and we consolidate. Okay, so we're still gonna wait 10 bars, and let's say the 10 bars is right here. Okay, so right here, after 10 bars, we're gonna look to see where price is. Is it within the range, meaning we're in the negative, or is it in our favor, meaning P&L is greater than 0? If after 10 bars we're inside the range, we're gonna place a limit order above our open price with an offset. So hopefully price will come up, and take some off before it gives our loss. Now, if after 10 bars we're in the money, then we're just going to keep holding our 2 contracts. Okay? So we essentially have a way to try to mitigate our losses whenever price enters into consolidation, and a way to potentially keep those 2 contracts for a massive win. And I think over a large sample size, it's going to improve the bottom line. I could be wrong, because we might be better off still just taking those partial profits in case price does keep on going up but then ends up crashing back down. But that's what we're going to find out. Gold, you gonna say something?
I think I'm following correctly, but tell me if I'm not. Is this where we're putting a limit just above the open? So if it does if it does sort of come back up there again before 10 bars have happened, it gets out there?
So after 10 bars.
After 10 bars.
So after 10 bars, if we're inside the range, place a limit order above our open price to take off 1 contract.
Okay. So it's almost like a inverted stop loss, I guess. Just as a chance kind of thing, you're sort of maybe using volatility to try and get a better price, or
yeah, I mean,
maybe I'm missing something.
You could definitely think of it as an inverted stop loss, I guess. It's just, like I said, a way to potentially mitigate our losses if price enters into a consolidation after the breakout, instead of doing what we want to happen, which is move way in our favor.
Yeah. Can you on the real chart, can you just kind of hover the mouse where an example of that would be? A level, or?
Yeah, so I mean, this first example is a pretty good chart for it. So we entered on a breakout here. After 10 bars, we're inside the range. So we placed the limit order right above our entry, which is what occurred here. We got out. So this is actually going to look the exact. So after we add this rule, this is going to look the exact same. The difference is in occurrences like this, whenever after 10 bars we're way in the profit, we're going to hold on to that second contract, because if we catch a fat tail with 2 contracts, then that's a lot better than catching a fat tail with 1 contract.
Yeah, so if it goes to the moon straight away, then you're in with 2 contracts, but after 10 bars, if it's gone back into the range, then you're trying to get out.
No, so there's no additional condition after that.
Okay.
It's just you go back to the picture. So this black vertical line is the 10 bar mark. And so after 10 bars, it's just a yes or no question, basically. Is it inside the range, or is it,
Okay.
are we in the money? If we're in the range, then we're going to place a limit order above our entry price to get out partial. If we're in the money, then we're just going to hold those two contracts. Does that make sense?
Yeah, it's super different way of thinking than I've ever really had to think about stuff with trading.
Yeah.
It's like,
I got you.
like listening to this is like, I was saying to my wife today, it's like with discretionary trading, done it for 16 years. It's like, I feel like I've been in a cult and someone's just said something like, hey, no, the world doesn't work like that. And it's just, wait, what? So it's bizarre framework of thinking for me. And I'm sorry if I'm struggling. It's just really different.
It's just kind of like we have this expectation, right? We expect, our assumption is that if we break out of the opening range, that there's going to be a strong push, and there's a very strong bullish movement happen after. And when it doesn't happen, then we're kind of like, well, maybe we should take some risk off at a decent, near break even spot.
Exactly. And that's
the moon.
Go ahead.
Yeah, go for it. No, I finished my thought. Go for it.
I was gonna say that this is honestly a very discretionary approach. Like if you were trading live, I knew whenever I traded small caps, you can just draw a little illustration. Like I was really anal about what happened and when it needed to happen. It's because I was always scalping. The moves were significant because they were so volatile, but when I say scalping, I'm more so talking about the duration of time I'm in the trade. And so that meaning, and this is still something you can use with discretionary trading in any setup if you're doing momentum volatility. But, if price, let's say we have, a green candle, and then we have a big red candle. Let's say we have two red candles, right? And for whatever reason, I'm going to get in on the high of this red candle. So I get in, okay? If I get in, I want to see bullish momentum, right? So I want this candle to look something like this. At least I want this green candle to close above the previous high. So if this happens, I take full size. So I take full size because, discretionary trading, I've had a lot of scaling. So take full size initially. If this happens and I'm still holding on to full size. Versus if we get something like this, a hard wick back below that level, then I might immediately take size off, or I might take off, 50% of my size at the low of this candle or of the low of the last swing. So it's the same premise over here. So many lines. With this pattern, we get the breakout. If it moves in our favor, we're going to hold on to full size. If it doesn't go as planned, we're going to take off some size.
I think the thing that's tripping me out is I've always, from day one, never had a problem with cutting losses. It's like, okay, if it's a loss, it's a loss. Just kill it dead. And for me to think it's okay to wait and see if it comes back is like red flags in my brain. It's like danger, don't do that. That's the wrong type of thinking. But like you were saying on I think it was it was the way of the ninja. It's like, who gives a shit where the stop loss is if over 10,000 trades it's proving consistently, well, not consistently, more so than not, that it's a legit thing that you can do. It's just a very it's a very different way of thinking to think, okay, is this going to happen 10,000 times in the next 6 years versus like, I've got to get out of this losing trade kind of thing as a discretionary trade. It's just a really different sort of thing.
Yeah.
I'm looking at this as a discretionary trade. No. Like we're supposed to be out already. Like,
Yeah. Well, we are.
Finally,
Go ahead.
what do you find? What do you find when? Sorry, it's Discord is tough to hold on. Talk that speaking, not speaking. But yeah. What do you find after you start doing a lot of back testing when you're trying to like set up this like tight little stop loss and you do testing and you find that the diversity of the outcome is a lot larger than you kind of would think it is.
Exactly.
But you can obtain a lot of good outcomes if it's a hell of a lot easier to build a system that's profitable over the long term with larger stop losses, even to the point where sometimes you'll try to build a system and it'll lose a lot of money and you're like, well, this loses more than it would have lost on commissions, even if it was random. I could just invert this system and actually make money, but it's like, would I really want to take 3K drawdown on a contract? Probably not. But at the same time, it's just because it's the nature of the volatility
For sure. The nature of the beast.
Of possible outcomes, even slight favorable outcomes could build into really favorable outcomes later too. So that you kind of want to contain that in your system.
I agree completely. Definitely.
Thank you.
Just those tight stop losses can really only be managed like in real time, because like your intuition is kind of working like a neural network. It's just, but whenever you try to quantify a tight stop loss, it's so difficult. That's why it's easier just to make a system that has that has an edge, period. And to mitigate our losses, our drawdowns, we look for that diversification. Because remember, what we need to make our drawdown stop, we need new equity highs. That resets our drawdown. So we need to have strategies that have a very likely chance, with no constraints, to catch those huge wins. And the more you allow it the freedom to do that, and of course the data is going to tell you if you're going too far. If your stop loss is simply too big, or and something's not right, and the numbers ain't going to look right. The metrics ain't going to be good. Simple as that. If all the metrics are looking good, then what are you worried about? Who cares what the stop loss is at? Just position size appropriately, have the right account size, let the edge play out. That's all. That's all you gotta do. I understand everybody just wants to make $1 million with a max drawdown of $50, but that's just not. It's not the case. So
I'm all for some risk. Like, I'm happy with it.
Say it again.
I'm super happy to take on some risk. Like, I don't mind it. I know it comes with the territory, so it's all good.
Yeah.
It's just the whole stop loss concept. It's like,
Yes.
It's very different to realize that your biases aren't involved.
Absolutely.
Because it's code, it's not you, kind of thing. So I'm still discovering this sort of thing.
I've showed a lot of people in the past. It's like, if you tell me your system, because the majority of people have a system with a lot of constraints, really nice awkward stuff going on, and then I'll tell you how much you have to take away to get better results. It's just like a mind-blown moment. It's like, why would these results perform so much better? And then you look at the chart and realize what realistic stop losses are. You know, stop losses that actually account for volatility and noise, and not just like these random rules that you made up because you looked at the intraday chart from yesterday. You know, people will see a chart the day of, you know, and think, man, I could have just risked the low of this candle and made a mill. Not even thinking about, you know, all the other potential outcomes, like how Joe was saying. There's just infinite potential outcomes, and there's going to be infinite more outcomes that your back tests aren't even seeing. So you have to, you know, like I was saying, all you can really do is account for the current range of the candles. That's why ATR is used in like just almost any system, because honestly there's just nothing really else to go by unless you can somehow predict the future. That'd be great, but since we can't, all we have to go by is the range, you know, and what amount of range will invalidate what we're trying to accomplish, you know. It's like when I was talking about the 3 moving averages, and each one, you know, determines a level of strength within a trend, and you know, so you got strong trends, weak trends, casual trends, so on and so forth. So let's incorporate this rule. I don't know if it will, you know, improve it, but we are about to find out. So the way we're going to do this is, let me think for a second. So position long equals long, we're 2 greater than 10 bars. Okay. So we're going to be a little more fancy here. So it's 10 bars since the entry, and then we're going to look at, we're going to say unrealized P&L. This coffee is not acting right now. Unrealized P&L is less than 0. Now, if it's less than 0, we're going to make a variable. We're just going to call it scale. Let's call it scale out. Why not? Scale out. I'm going to set it to false by default. Go back to our condition, and we're going to, I should really make a variation, but I'll be able to come back. Okay. So we're going to take this away, and we're going to set our variable set scale out to true. Okay. Now, if you're not familiar with variables, well, if not, well, I guess with what we're doing right now, I feel like it's hard. It's very simple if you understand it, but if you don't understand it, it's kind of hard to explain. But this is simply, there's no other word for it. It's a variable that we are setting to true because this occurred. Joe, you're a programmer. Do you think of a better way to explain that?
Repeat this again, because I was trying to get in this condition.
I was saying.
That is true. So we're setting a boolean to true, basically, if these conditions apply. So it's either true or false, and we'll probably use that value in something else.
Cool. I was more so wanting you to explain it like you were explaining it to a 2-year-old, in case anybody doesn't understand.
Yeah, I didn't know what that meant, Joe.
And we want to know that they all happened for later.
You're right. Maybe once we go through some more, it'll make a little more sense. But so what we're saying is, so we're long, position quantity is 2, bar cinch entry is greater than 10.
I think I might have a way of explaining the true false variable. You know the old thing people would say about if there was a handkerchief or whatever, a necktie hanging on the doorknob, that meant don't go into your roommate's room because you knew he had a person in there with him. Well, that's like the variable. The thing on the doorknob told you that that something was occurring. That's a way of.
It's a good way of putting it. It's a good way of putting it. So that the handkerchief is letting us know that some funny business is going on. So don't go in the room. Now, if the handkerchief wasn't there, then go in the room. Okay. So here on the chart, here what we're looking at on the builder is when this happens, we're going to be taking the handkerchief off the door, indicating we can do something. We can go inside. Because by default, remember, by default, the variable is false. So by default, the handkerchief is on the door, don't go in. When this happens, we're taking the handkerchief off. Now it's true.
But it's like a switch that allows something to happen only when something else happens.
Correct. But now we gotta be careful because we've set this to true, and now we gotta say, okay, now it's true. Now what do we do whenever it's true? And then we have to have something that resets it back to false, or else catastrophe will occur. So anyways, so scale out equals true when this happens. Okay, now we gotta create a new set, and we're gonna say, let's see, user variables, scale out equals true. Scale out equals true because we set it to true when this happens. When it's true, okay, so go back to the illustration. After 10 bars, we looked at if we are in the negative, if P&L is less than 0. So we're in this scenario right here. So at this point, Boolean set to true. So whenever it's true, we want a limit order placed above or at our entry price. So, sounds easy, but we gotta create another variable. And this is gonna be just called our entry price. And this has to be a double because it has a decimal. So entry price. We go back to our conditions. And this is another way you can really mess up, because the way we have to do this is what we're going to do is we got to go back to whenever we enter a long, which is right here. This is whenever we enter a long trade. Whenever we enter long, we're going to set our entry price to none other than our entry price. So we go to strategy, and you see average position price, okay? However, we don't want it to be our average because we want to take a little bit of profit. So we do the offset. So average position price plus ticks. We'll just say 4 ticks, so it's gonna be 1 point. For the ES, that is. Looks like we could do a percent actually. But for now, we'll do ticks. So we're setting the entry price to the average price plus 4 ticks. I think by default, that's gonna make it above 4 ticks. Whereas if I did a negative number, then it would do, minus 4 ticks. But we'll verify that on the chart. We'll do 4. I might even have to put a plus 4. I don't know. Might have to be plus 4. Let's see if it keeps the +4.
Yeah, it's positive because it's showing up as the price
Yeah,
times the average.
I see that now. Okay, then yeah. So, we set our entry price. Whenever we enter long, we're setting our entry price to the average price plus 4 ticks. Now,
What's the switch that activates this condition?
so right now this is our first set that just enters long. So now we're adding an additional action. Whenever we enter long, we're going to set a variable that we named entry price to our current entry price, which is the average price, plus 4 ticks. So now we go back over here. Whenever our scale out is true, right? Whenever after 10 bars we're in the negative, that makes it true.
Oh, okay.
We're
10
gonna-
bars in the negative. Yeah.
Yeah. So scale out is true.
That turns the switch on.
Correct. That turns,
Okay, I'm following. I
that-
think now.
Okay, cool. So that turns our switch on, but now we want to place a limit order above our entry price. That's why we had to use another variable, because whenever we're trading other products, whenever we're doing other stuff, you just don't tell them what the entry price is going to be, you know? So that's why the entry price has to be set whenever we enter long. But now, whenever scale out is true, we can set a limit order. So it's going to be an exit long position by a limit. Has to be a limit because we're placing this order when price is below it. So it's actually a sell limit. Exit long position by limit order. Seeing this nice little box here, it has limit price. We hit set, and now we set it to our entry price that we set in our first set. And the default quantity, let me think for a second. So we're always going to have 2, so it's just going to be 1. Exit long limit. And so now the question is, because we're not done yet, we have to note what has to happen to change this scale out back to false. And the way we figure that out is we look at the potential outcomes once this variable is true. So the variable is true, and so now 2 things are going to happen. We have a limit order placed, so either price is going to come up and hit our limit order, which will make our position quantity 1, or price is going to keep on going down and stop us out.
I got a suggestion.
Yeah, go ahead.
So, in strategy I'm currently working, I have basically a time-based stop where if after a certain number of bars it goes to break even. And what I found is that a lot of the time, it kind of, if you added a little bit of if you added the possibility of upside, you know, if you added that little bit of long tail result, it sometimes performs better. So I wonder if we should make it, if we hit our entry price plus 4 ticks, set a stop at one contract at our actual entry price, and just, you know, assume the 4 ticks is going to be in the noise, and then reserve the 2 contract upside if it is breaking above the opening range again and finally decide to take a run.
I see what you're saying. So he's saying that, you know, if it goes up 4 ticks, place that stop at break even, just in case if it goes back down, in which case it's just a break even. But in every now and then, if it keeps going up, then it'll work out good.
Yeah.
Definitely a good potential slight variation. I can definitely see some value in that. Might not do it this session, but definitely, because that's going to require some higher resolution back testing, since that can easily occur intra bar. Thinking off the top of my head, it should need a higher resolution. I'm gonna think about it a little bit more, but yeah, definitely something to potentially incorporate.
I mean, you could always just like set the low and the idea is good. It's like you want to reduce risk. So whether you reduce risk by taking tiny little profit, or you reduce risk by saying I'm just not going to take any losses, kind of makes sense either way. So.
Yeah.
Is it kind of like creating 3 results now instead of 2? Because before we had loss or profit, and now it's loss, break even, or profit. Is that what is going on?
Let's see. I
mean, that's the thinking anyway.
It wouldn't be a break even for the entire trade. It would be a
for one contract.
Yeah, for one contract is definitely a potential break even. For the most part, slight profit.
I mean, if it's inside the volatility, it may not matter, because it may just be that your stop's just going to get hit so much, your upside is negligible. But since we're
I mean, it's definitely a very small tweak that might affect the bottom line, and that's really the kind of tweaks that I like. Those small little money management tweaks that might really affect the bottom line long term.
And realistically, we probably, anytime you move your stop, you're essentially putting on another trade. So this would be basically like putting on another trade with that risk profile of the stop being pretty tight. And it may be that 4 ticks is too tight to really see any benefit from it, but it's the same idea of that. So.
Yeah, for sure.
This might. Sorry, go for it.
Well, I was just gonna say we're actually talking a lot about right now about that one contract that takes partial profit and whatnot, or gets off a break even. Whereas honestly, the whole premise behind trying to add this rule is kind of like just saying like, hey, after 10 bars, if we're in the money, maybe just hold on to those 2 contracts. And I kind of want to see if that will improve it. And then if that improves it, then definitely opens up some other doors of some slight tweaks to the other contract, like what Joe was talking about.
With this may be really like a massive oversight on my part, or I might not be thinking straight, but to me it's like, if it's after 10 bars and it's going up for break even, why not just get out of everything? Like both contracts instead of one? Because if it goes up to break even, you get a one contract, and then it goes down to the low and we get taken out for a loss. You've got one break even and one loss on one contract.
Yeah. So I mean, that's another great potential variation we can test.
But if it does keep going up after 10 bars, then your profits are getting cut in half in those scenarios, because you're only long one contract instead of 2. So you can still, it's like It's almost like a filter for trades that go good from the get-go. You're on for 2. If it goes bad from the get-go, you're down 2. But if it sort of goes halfway, you're either up for you're in for 1 or out for 1, kind of thing.
Well, from a risk perspective, or a just philosophical perspective, do you think there's alpha in reducing risk if a trade is not going well?
I didn't hear all of that.
Oh, is there alpha in reducing risk if the trade is not going well?
If the trade is not doing what?
Not
If
going
it's not going well. Joe, just real quick, next to the mute button, there's a user setting button. If you click that and then click voice and video on app settings, there's an input sensitivity switch that automatically determines the input sensitivity. If you turn that off and turn your input volume up, that should make you louder.
Voice and video.
There's an input sensitivity switch. You can click that to turn that off, and then you can turn your input volume up. That should make it louder.
Yeah, I'll try to tweak that.
I think that may have helped.
Reagan spilling the sauce. And I mean,
You
really,
made 6 mil.
see what you're doing there. Looks like you didn't optimize. ATR is on default. You got it on 3.5 though, and you got 3 on the Laguerre. So yeah, that is fucking absurd. But this is the way of the ninja. That is the result of, I guess you could say it's a result of, ensuring you're just creating simple, robust systems. And then when you create, systems based on just a solid, robust premise, then the faith you have in it moving forward is much greater. Dude, I don't even know what basket you're running it on. 47 contracts. And of course your return to drawdown ratio gets a lot higher. Normally the more diversification you have. Let's check it out. Okay, so you ran on some of the Euro stuff. And QI, QG. All the Forex pairs, even the exotics. So yeah, I mean, it's a great test, man. I don't know.
I ran it. Go ahead.
Say it again.
Let's say, so I ran it and I did exactly what you said. I went through it with you, and I just got zeros for everything.
Yeah, zeros for everything. You mean with this new rule that I just was putting together?
Yeah, with entry price is a variable, position average tick plus 4 tick size, and then
Okay.
I mean they're doing everything else: scale out, true, exit long limit, entry price, etc.
Let's real quick see if I'm getting the same result. First, I need to set that variable back to false. So I think what I can do here is let me just think for a second. Not is true. Exit long limit. Yeah, I was thinking that, to be honest, I was thinking about what I was going to put. I was just making sure it wasn't anything else. But I'm pretty sure that's going to be the one that works. Let's go ahead and do that. If it doesn't work, then obviously I can look back at the chart. Current market position equals flat. Sets are scale out to false. Let's go ahead and compile. Let us look at the results. See if we get zeros across the board. We do not, but we get much worse results. Let's check out the NQ, and it is not performing properly. So let me think for a second. Let's see, we entered long. After 10 bars, it just exited both. Let's go back to our scale out equals true. Exit long limit. Don't think it's gonna work still yet to change something else, but let me see. Let's go back to the NQ. So it's just exiting. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? 1, 2. So let me just diagnostic, let me remove this offset. Position, average price. Things always gotta take more thinking. Maybe you start using variables. Why is it just exiting after 10 bars? Long to exit long position by limit order. Let's run another little test. Let's say if we're true, and then let's just run it as price close. Scale out equals true, position quantity equals 2, price close greater. Well, just in case if it does something weird, we'll do the high So high is greater than the opening range. Oh, let me do this. Just copy and paste. Price high is greater than opening range high. Exit long. Equals flat. This is just a test to see if it was the limit order that was not working. Let's go to NQ. Okay. So now it is doing it as it should. See, after 10 bars, the high of the candle, that's why I went ahead and made it the high in case if it doesn't close above. Of course, we can do the close. Let's see. So that means that for some reason the limit order wasn't working. Add it again. Set entry price to average position price. Scale out is true. Position quantity is 2. It should be a limit order. Exit long position by limit order. And it is not doing it. It's just exiting after 10 bars. Let's, for some weird reason, use a stop order. So it did it correct right there, but I don't think it's doing it the way it's supposed to. Let's change the color so we can see the wicks. So here's the entry price. So it should have filled right there, but since it's a stop order,
Not right, because you set it to the high, or
let me let's find another example right quick. So here's another example. So we got our entry. At some point in time after 10 bars, we were in the negative. So it came up. And then hit our not triggering at our entry price. But stop order doesn't even make sense because stop order is when it's below. So we're placing a stop order when it's below. It's real quick. Just do a we'll do a second. So we'll do like a 10-second resolution. And we'll go ahead and run that. Can take a little more time.
While this is running, can I ask a quick question on complexity and robustness and stuff?
Yeah.
If this is like, please forgive my ignorance here, but it's like, seems like you've got a crazy amount of things going on. Is that still like robust because it's not changing the premise, which the premise is robust, or like?
Well, to be honest, I'm kind of surprised you said there's a lot of things going on. I mean, you might be a little overwhelmed by like all the conditions in the builder.
But it's not a lot in reality, or?
No, actually, this is extremely simple right now.
That's my mistake then. Okay.
Oh, I mean,
Okay.
like I'm thinking like you're learning a lot of stuff at one time, so it probably looks like we're just.
It just looks like you've written the entire matrix in a program on thing, but it's probably just a really simple strategy. The same. It just looks complex because of the code part.
Yeah, I'm sure once you get used to it, it's gonna, you'll see basically. Just let me think. Because normally I don't have to use a higher resolution. I never have to use a higher resolution to do stuff like this. Just we'll exit at the correct price. And even using the higher resolution didn't get us out at our entry price. Let me change the location of this variable whenever I set it, because that can impact things a lot whenever you actually set the variable. So we're going to put them both over here at the same time. So we're going to paste this entry price equals position price, and then exit long position. Same thing as we did last time, and see if that fixes it. Because now it should refresh on the way the builder works. Refreshes on every bar, but it still shouldn't matter because it should have set it whenever we went long. But let's just see if this fixes it. And it did. Yeah, so I'm glad y'all could go through the grueling process of figuring something out with me, because it really is grueling sometimes. But here is our premise now. See where we entered below, price came back up, got us out a break even for one contract. Whereas in this scenario, we held the full 2 contracts, which is exactly what we wanted. And in this scenario right here, we held the full 2 contracts. So cool. We can look at our results. We do have our highest profit factor yet. Let's compare it to our other results for our a smaller basket. So our total net profit increased by 10,000. Our drawdown increased by 2,000. What I want to do is look at the profit to drawdown ratio, because no one has built me that metric yet for NinjaTrader. Not a coder. I just feel like making a metric should be, it just sounds so simple, right? Because in Excel, it's like the simplest thing in the world to make a formula to get a number. So
Does it matter at all that the percentage profitable has changed, or that doesn't really matter?
No, it's very misleading when we're scaling in, scaling out of different positions, because NinjaTrader looks at them all as separate positions. So
Okay.
once I start like adding and taking away and doing stuff like that, I don't really look at the win rate in this case. Let's see. Definitely the profit to drawdown and the profit factor. And if we had the correct Sharpe ratio on here, I would be looking at the Sharpe a lot, but we don't have the right Sharpe ratio. 120,000 divided by 15.5 gives us 7.7. And then our new one gives us 7.4. So pretty much the same net to net drawdown to net profit to drawdown. The profit factor is higher. But before I see if, before I run this on the baseline to see if it's worth adding in, because the only reason, the results are so close that it just needs more sample size to really see if this rule is worth using. But before that, we can add additional offset like we did before, now since it's working right. So we'll just set the arithmetic. I've never actually used a percent for the arithmetic on NinjaTrader. Let's just see if this works. 5%. No, that's too much. 1%. So position price times, I guess we're doing 1% there. Let us compile. Let's see how it looks on the charts. So we're at 130 and 17. So it did not work using the percents. Maybe I didn't do it right. Let's do +1. That didn't change it. Yeah. Maybe that's why I never used the percent on here. We'll do +5 ticks. Worse results. Less profit, more drawdown. So we'll keep it at 0. Go ahead and compile. Make sure it's correct. Cool, so we'll test this on our baseline. This is our current baseline. I already have a screenshot of it. Make sure everything is correct. Should be correct. Now I can read Reagan's question. So related to the test I just did, would based on those results the idea be to not run on the strategies on the one that performed poorly on, but since this is based on 2 years data, what if they perform different? In 2 years, do you keep everything for diversification or trim it down to the best performers? Man, I wish you were on here for the last session, because I went over exactly that for like 30 minutes. I'm gonna have to recommend it to you. So it looks like we did improve our baseline here. Yes, the morning session. Let's go back to our, man, it looks like we really improved our baseline actually. Where the shit, it's the baseline picture. There it is. Okay. Pulls it up. Let me I don't know why, for some reason that coffee like really upset my stomach. I was using like some cinnamon bun like some cinnamon bun creamer. I don't know what's going on. Didn't work out. So our base metrics were profitable. It's one of the first things I look at, you know, base metrics, the amount of products we're profitable on. So we got 1, 2, 3, 4, 5, 6, 7. On our new test, we got 1, 2, 3, 4, 5, 6. So barely profitable, but profitable is profitable. Increased the amount of products we're profitable on. Our profit factor increased by 0.2. Our average trade increased by 15 bucks. These slight increases, you know, pretty important when sample size is significant. Once sample size is significant on a, you know, from a portfolio standpoint, normally a profit factor of anything over 1.2 is really freaking good. Obviously 1.3, 1.4 is really high, and then profit factors over 2 is just random chance for them in almost all cases. And once you add more sample size, then profit factor drops. But anyways, our net profit increased by like 60,000, while our drawdown ratio only increased, or by, I mean, our drawdown only increased by 3,000. If we do that about 20 more times, we'll be doing pretty good in life.
Can you briefly go over the conditions real bit more on as off what it is?
I don't know what's up with your mic. You just sounded like a robot coming through. Might need to connect and reconnect.
Can you hear me now?
I can hear you. It sounds like your connection is like really bad or something. Like it's not coming through. I wish I could tell you it was better, but it's yeah. If you, I don't know what you said, but go ahead and type it out. I guess. I think you just said you'd go over the conditions. You mean the conditions for this like variable stuff we have going on? Because I can definitely see that being confusing. because it still confuses the shit out of me sometimes. I mean, the fact that we had to change when we set the entry price and why it didn't, because I've made tons of systems where I set the variable when the trade is opened, and it does exactly the way it's supposed to. So I don't understand why in this case we have to do it when the variable is set to true, but we figured it out. That's all that matters. But yeah, I'll definitely go over it. Let me check out this net profit to drawdown. I'm hoping it's over 31.
So I've had it happen in the past where if I tried to execute an order about the order in the same command, like right after the command to enter the order, the exchange hadn't filled the order when it sent the next command to like set stops or targets, and then gave an error and it would bomb that out. I don't see why in backtesting that would happen because everything's on historical data, but as far as live running goes, that's why you would have to separate things related to the order from the order getting filled. You would have to put it in the on execution update method, and not just when the orders are submitted. So just explaining a possibility there.
Yeah, I see what you mean there. That definitely gives me a freaking headache. Let's see.
Give me one until I figured it out.
Ugh. Alright, well. Trying to see what Joe said. Can at the end you briefly expand the strat box to the max and click through each of the sets? Yeah. So our net profit to drawdown, sadly enough, decreased by about 1.5. However, given the circumstance, our profit factor did increase, and our average trade increased, and the amount of products that we are profitable on increased. So I think that makes up for the 1.5 point decrease on our net profit to drawdown ratio. Really irks me, but I think I will have some mercy because I do believe in the premise behind adding that rule. I think it is a good rule, but there is something that I still want to adjust, and let me show you. So let me go back to our, well, this is our new baseline. Let's give it a round of applause. Well done. We're on the race to make every product profitable. Probably won't happen, but we are on our way there. So I love how we're holding these winners with 2 contracts. And let me go back to the NQ. Better example. I love how we're holding these winners with 2 contracts, and I love how we're taking some size off in subpar conditions. What I don't like is scenarios like this, where price goes heavily overbought and we don't take any profits. So I still think we have, so our first scale out is to mitigate risk whenever a good breakout doesn't occur. I think in additional scale out now to take advantage of dramatic profits would also benefit this a lot. And that would Go ahead, Joe.
Bollinger Band exit might be useful in terms of go back to where you're seeing the go to the right.
You still sound really hard to hear. I don't know if...
Okay, go to the right.
Okay. Let's go back to the other one. Okay, here you go.
Where you where we didn't capture the profit, right? So one of the things you see, right? So we buy the breakout, and then it's great, but it went into basically consolidation phase, right? So if we look for that consolidation phase to start, and then we target the high, we would get out pretty good, and I think in a large percentage of times, as a scale out, kind of medium range, good exit. If that makes sense.
Yeah.
So if you toss a Bollinger of like, I don't know, call it 25 or 50 or something like that, maybe 100, it would probably tap the bottom on that low, and then you could target that, pretty reasonably, pretty near to the high, and probably get out.
You're saying, so once, let's say we're looking at the Bollinger Band width, and the Bollinger Band width crosses a threshold, like let's say the Bollinger Band width is less than a threshold, we would then look to close at the highs of the Bollinger Bands?
If price taps, so it's all relative strength, right, within some kind of volatility frame. So if the relative strength is decreasing, which in any trend, touching the bottom of Bollinger Band is probably going to be a relative strength decrease. But a lot of times you'll see consolidation or chop, and it'll go back and forth between
yeah, for sure.
So if you have that be a second scale out is true variable, and then
first I'm trying to get you to tell me, like, what exactly turns it true, the width of the Bollinger Band, or just when price touches the lower Bollinger Band?
Like the low or the low touches the bottom Bollinger Band.
Oh, okay. So when price touches the low of the Bollinger Band to target the top.
Yeah, or 75%, or it doesn't really matter, but yeah.
Or maybe cross above the midline just for mean reversion.
Yeah.
Cool. So we will definitely test that out. Let me think of something real quick, because before we test that out, I'm going to test something a little more simple to where I don't have to create another variable. And then 100% we will test out that idea. So what I want to look at is we're going to make a new set. And we're going to say, we are long, position quantity equals 2, bar sense entry is greater than 10. It's almost identical. But now, unrealized is greater than 0. So we're in the money. Now all I want to do, well, we gotta go back up here, is look at, we have a couple of options. We will test out the double smoothed. So many options, dude. You know what? I think I want to do the force index. Force index. do relative volume. I hate indicators that have this many freaking parameters. But the force index is really good at what it does. So we'll just do crosses above numeric value 2.5. I haven't looked at it on the chart in a while. I need to show you guys what the force index looks like. Let me squeeze it onto the chart. Let me open a new chart. ES. Sure. So basically what we're looking at, the whole purpose of using this is we're saying like after 10 bars, we're in the money. Still got our 2 contracts. We're waiting for a hard push into our favor, and we're exiting on momentum. That's all we're trying to accomplish there. And what we're going to use first is the force index, which is it's a volume-based indicator. So it kind of looks for that volume exhaustion. Let's go ahead and check it out. So obviously we have to decide what threshold we want. Just look at the absolute volume, and we need to normalize it so that it works better across other assets. I forgot about that, so let's just go back to relative volume, normalize it. Now since it's normalized, we have our 2 little lines. Let's get our cursor. So right here, you can see it crossed above on this hard momentum push. I don't know why I'm trying to draw something. Let's go towards a market open. So here the market opens on the 1 minute chart. Hard push here, hard push here. Pretty decent at spotting some oversold and overbought. Hard push here. So yeah, now I know how it works. It's pretty much just an oversold overbought indicator, but it is volume based, and it can use relative volume or absolute volume. So cross above, force index, normalize, and we'll use relative volume and absolute volume. Leave everything else at default. We're not trying to over optimize anything. The overbought value is 2.5. Then we're going to exit long position at 1. Might be missing something. I'm gonna go ahead and compile, keep my fingers crossed. If not, I'm gonna have to come back and critically think. So we got 130. I don't think I've saved our new baseline yet. Let me save our baseline. And let me screenshot our current miniature basket. Run this test and look at the chart, see if it does right. Let's see. Never got the cross. The force index over here. Let's go to the NQ. Talk about some divergence, good grief. All that bearish volume probably just trending on up. Just want to verify that it's working right. Let me go ahead and change it to absolute volume. It's relative volume, and it wasn't working very well throughout the day. I think that's mostly because uptrends a lot of times tend to be pretty low volume, just kind of creep on up, whereas downtrends are much more volatile. Like for here, when we cross beneath, it's really volatile downtrend. We cross beneath on the force index. So now we use an absolute volume. I'm going to run this test again and see if we can get. So it's just not doing what we want it to do. So we use a more traditional type of oscillator. We use the double smooth. We'll do the double smooth momentum. That's one of my favorites. So double smooth momentum crosses above 80, and this should execute our premise a lot more. It's much more simplistic. Let's see if it's doing right. So cool, it did get us out where we wanted on this push. Let's maybe look at another example. Need another big uptrend day. Okay, so here's another example. Didn't get us in on the initial push, and that's because we have to wait for a cross above. So that's a potential weakness, because in reality this could have happened and it could have kept on going back down and stopped us out. So I think the different trigger that I'll experiment with is whenever the DSM crosses beneath the signal line. So now we're allowing a little bit of pullback, but not very much. But we got to add two things, because we want the DSM to be overbought, and then after it goes overbought, we'll wait for the pullback, or we'll wait for the little tiny crossover. So all we do is go back here. Got the DSM Blau. We got to change the plots. So we got the DSM. We'll keep that as it is. Then cross below. The signal line. DSM crosses below signal line. Copy and paste. And then we're going to say that the DSM is greater than 80. However, it cannot be 80 on the current bar, because that leaves us susceptible to it crossing beneath the 80 line on some like really volatile crossover. So we just want to check to make sure that we were overbought before this occurred, So we say DSM greater than 80. 1 bar ago. The magic number. Hit compile. And let's just see how that affects these results. Somehow. So looks like it is doing it correctly. It's just like, no, I think the drawdown increased. So yeah, so results aren't good enough. It is executing properly. And I bet y'all are just dying to optimize this DSM. Let's optimize the period and see what happens. But I'm going to pass on that. I will, however, use one more oscillator. And I think it's going to be the double smooth stochastic. Plot on the charts. I think we have to use the K. K crosses below the D. K crosses below the D. And this, well, let me go in. So K greater than 80, 1 bar ago. My memory might be wrong. It might have to be the D over the K. Not 100% sure. I'm going to find out. But real quick, I want to go over why we're not going to optimize the period on the DSM. Because, of course, if we optimize, we'll get much better results. But we wouldn't be achieving anything. That's just textbook overfitting. And the reason for that is because we've already looked at the chart and we look to see if it is executing our premise. Like, it's what we wanted it to do and it's doing it. So there's nothing more to even look at. Like, it did what we wanted it to do. It did improve the results. And so we move on. Now, for some reason, it needed a higher period to execute our premise. Then it actually makes sense to try to optimize for a higher period. So I think I've already compiled. I'm going to try out the double smooth stochastic. We got worse results. Let me see. So got us out a pretty nice, it got us out at a better price than the other one as far as this trend goes. Got us out for a really good price right here. Really good exits on those examples. A fantastic exit right there again on another uptrend. So See a lot of potential to the short side for opening range breakouts. Big weakness of using the Laguerre right there is every now and then this is a price shock right here. This is just a massive you know, something crazy happened here for sure. Definitely an outlier. Something other fundamental occurred. So now here's another example where it did pretty good. It's executing our premise properly. We're seeing that it's, you know, doing really good in uptrends, but it does not help the bottom line, even though we thought it would. And what's that's telling us, in this case, is that for some reason we're better off still just holding until the ATR is hit, instead of taking partial profits on these uptrends. Sample size is kind of small, but given the way we're doing this right now, I feel like if it was a good enough rule, then it would in fact improve our mini basket here. You see here might be one of the scenarios why it's better. You know, we took some profits here. It's a great entry on the first pullback, or a great exit on the first pullback, but you know, it left a lot on the table for these massive fat tail days. What a nice uptrend on that day. All right, done staring at the chart. Let me try one more thing, then we'll try Joe's idea. This is an even simpler concept. So we're long, position quantity is 2. We're greater than 10 bars after the entry. We're in the money. We're going to take away the oscillator, and we're just going to say, where is it? The max high plot on the chart. We're going to use a 20 period high. We will look at a couple of different variations of the period. Max 20 period high is greater where is it? So it is greater than the max high 1 bar ago. So it makes a new 20 period high. So the max high is greater than the max high 1 bar ago. It's the way it has to be for that type of condition. So if we're after 20 or after 10 bars, we're in the money. We're just saying when we break a new high to exit out. Exit out partial profits, of course. Let's go ahead and run this test. lowered our drawdown, but you can see it in action right here. After 10 bars, exited on a new break. I'm going to experiment with a few more numbers here. Maybe the 50. Let's just use 55 because that's what the Donchian uses. Maybe there's some magic in the Donchian 55. Let's go ahead and run that. It's an interesting result. Did decrease our drawdown some, but it's just not significant enough. And we'll see if it benefits from even less sensitivity. We'll just try the high or to do the 100. See how that works. Still not better. And let's make it super sensitive. Just to see if for some reason it being super sensitive makes it better. This is just out of curiosity. I definitely don't expect it to. There's no reason for it to. Definitely does not. So another example, for some reason, taking profits, you know, mid-trend on the breaking new highs or just whatever, not working out, at least doing it this way. So let's hop on Joe's way. Let me think for a second. You said, that's right, price touches the lower band. Okay, so we're long, we're 2. So we can take away the bars since entry. Although I think we should probably keep that for right now. P&L is greater than 0. So we'll do price low, not a close, just this means that it's just if it touches it, period. Doesn't matter where it closes at. Price low is less. I actually have a modified Bollinger Band that you'll love. You can use over 20 different averaging methods for the Bollinger Band. And it gives trend direction too. We'll get into that at a different point. But so, price low is less. What do you use the default Bollingers? Plot on the charts. I really think if we're going to change one of the default values, it should just be the standard deviation. I think that'll still execute the premise. So we can just, you know, do a deviation of 3, deviation of 4, and, you know, one of those deviations will definitely stand out if it does good. Waiting here to see what Joe says. Well, that's why I was saying it all depends on the deviation. Like, yeah, like if it's a default, it's going to affect the occurrences is definitely the deviation. I just don't want to optimize both of these. That's too much. But I'm willing to definitely perhaps, you know, optimize the deviation just a little bit. Because that optimizing the deviation would definitely translate to other products. Same with ATR translates, since it's volatility based. But I'll make an input for the standard deviation. So low is less than the lower band. I'll make a deviation. Yeah, for sure. We'll call this BB deviation, make it a double. By default, I think it was 2. And now we need another variable. And this is going to be we'll just call it target scale. Make it a Boolean. Default is false. So low is less than the lower Bollinger. Set the deviation to the BB dev. Make sure everything looks correct. It does. Remove the exit long. Set target scale that I spelled wrong to true. Cool. Go to another set. Target scale equals true. Order management. Oh, gotta add some more to this. What am I doing? Let's copy and paste this. What are we looking at? High. So I'm not going to set a limit order on the midband right now. I'm just going to do the high. So it's pretty much going to trigger at the same time, and then maybe later on we can see if pinpointing the exact price of the midband, improves it. But this way, if it touches the midband in any way, it's still going to exit the trade. High is greater than the midband. Exit long position, we're going to exit 1. Let me see. I need to copy. Position size is 2, true. High is above midband, so we exit long 1 contract. The only way this is ever turned true, let me see, wait, yeah, I already have it over here. So here, you have the position, it goes flat, turns us back to false, so we'll just add the other variable to that. So target scale is false. Well, if you weren't confused yet, just hang in there.
ever seen that movie Cliffhanger?
Say it again.
You ever seen that movie Cliffhanger?
I don't think I have off the top of my head.
Oh, okay. Or what's that? What's that other one where he gets like a rock stuck on his foot 21 days or some shit? Like it feels like that. I'll get there.
For sure. So let us see. This is our index basket. So we're just going to run the optimization from 2 to 5. So 3 possible iterations here. Of course, keeping everything else as it was. And let's make sure, well, first we got to set our settings because now we're in optimization phase. So we got to aggregate. We'll do it by net profit. Make sure everything looks correct. In the moment of truth, show me the sauce. Let's see. So it is a close call. However, we do have our highest profit factor yet. See it in action. So you can see here, never touched the lower band. So right off the bat, I want to try a little variation of this. Extremely simple change. I just need to see where it works somewhere. Let's go to NQ maybe. Show me an occurrence. Here's an occurrence. So here, the low is less than the lower band. So I exited about right around here. So that just tells us that it's working. So to increase the frequency of this occurrence, of course, we're going to keep these metrics in mind, and we'll come right back to them if this little improvement or this little, change does not do anything. So what we're going to say is the low is less than the lower Bollinger Band 1 bar ago, which will just increase the frequency some. Give me 1 second. I'm back. So, lower than the Bollinger Band 1 bar ago. Might try 2 bars ago as well. Let me type in these metrics. So 136K minus 17K with a 1.43. Go ahead and run this again. See, so really close. It's not even honestly different enough to even compare. Let's set it to 2. Yeah, for sure. I'll try with the lower with the higher period. Let me see if 2 changes it any real quick. Still pretty similar. Okay. To really actually even see a difference, let's actually just really bump it up, because it's just not happening enough. So let's make it 10, which I know that's why you want the longer period. The longer period will make it happen more. Let's see, 10 bars ago. So pretty much the same profit factor. All right, off to the longer period. Let us change that back to 0 and do a hundo. It's the only other one I'm trying. I just cringe at the thought of changing 2 parameters, but we will do it. Okay, so slightly worse results. Wait a minute, this was a previous result? Well, if this was a previous result, then the other ones actually improved it. That made no sense. For some reason I typed that the profit factor was 1.43, where it was actually 1.41 for our original. This is our original 1.41. Let's go back to 14. Before I change the bars ago, let's see if we might benefit more from saying, when we cross above, or when the high is greater than the upper line.
I think you might want to do greater than or equal to.
Oh, wait a minute, there's an issue here. Regarding the longer period, I didn't change both of the Bollingers. So let's do the longer period. Okay, yeah, we'll do greater than or equal to. Let's do a longer period, put it back to middle. There's a longer period. Longer period set to middle. Longer period using the low. Do the old compile. Oh wait, that's why I gotta change it to greater than or equal to. So I guess on both of them, less or equal. High, greater, or equal. Both of the Bollinger Bands links were changed, so we don't get some weird double Bollinger Band action going. And I mean just spot on with the first results. 130, 17, 1.41. Pretty interesting, actually. Big difference in the period, but even with optimization. Got like almost the exact same result. Let's change the value back to 14, and on the second set, let's say instead of using the middle band for the target, we'll use the upper band. See if that gives us any secret sauce. And we do get slightly better results, a little bit more profit, a little bit higher win rates, a little bit less drawdown, higher profit factor. So definitely a better results using the higher band. Good stuff. And before I call it at that, let's so I can do the bars ago. Let's just do 2 bars ago and compile. Honestly, pretty interested to see how the Kelter bands would do with this as well. Kelter bands just don't look as crazy as Bollinger bands do. Because Kelter bands only use the ATR. But let us screenshot this real quick. And now we're using the trigger for 2 bars ago. So the profit did increase. That is the wrong picture. Here's the right picture. The profit did increase. I'm seeing a profit factor increase on NQ minus 0.1 on ES, same. 1 point increase on EMD, 1 point increase on RTY. Profit factor increase. Same drawdown, 3,000 more bucks. Cool, so I think we have something worthy to test against our baseline to see if this rule is gonna, translate to a much larger test. So I've already taken a screenshot of our current baseline. Let me make sure. Yep. So now it is the moment of truth for this rule. What was the parameter? It chose 3. So we got 5 and 3. Everything looks right. Let's go ahead and run it. Now we're getting on up there. So a big test here to see if this will improve the system. I can't show you both pictures, but it did not improve the system. It increased the amount of non-profitable products by 2. So it added on 2 more products to the unprofitable list. It increased our drawdown by about $100, so not much there. Pretty much the exact same profit, which is really interesting because the whole point of adding this was to preserve profit in the scenario of pullbacks. But that is just not the case. You know, still telling us that we need to just hold on, you know. It's like, look, I know you're trying to exit with a little bit of profit to capture all you can, but you're better off just holding on to it, you know. Which is sometimes the case. So if you want to compare this a little bit more, because you can like pause it and look at our current baseline. But in pretty much every metric, it does worse. The profit factor is the same, but our drawdown is higher, our profit is less, our average trade is less, and it's added 2 products to our unprofitable list. So let me revert. We have this condition. Let's see, greater than 0. So we can take that off. Here's that variable, take that off. Take the scale out variable off. I took the wrong one off. Set scale out, false. It's the target scale I'm taking off. Okay, that should bring us back to baseline. Let me take target scale. Gotta remove that parameter. And that's gonna make sure we're back to baseline. My brain is pretty fried right now, so I might have missed something. Let's hope that I didn't. Sweet. Okay, back to our baseline. Okay, so we tried some additional money management methods. No freaking success. Obviously, we can try some more in the future. I have some very cool trend indicators that I want to see if they perform better than the ATR trailing stop for holding on to those fat tails. We've definitely ran out of time tonight. This session took way longer than it was supposed to. But yeah, still an amazing baseline and a great spot with the orb. Had some good tests tonight, running through some potential improvements, but you know, doing it in this fashion, testing if those improvements actually make an improvement is very important. And I do 100% believe that using some more advanced trend indicators is going to improve our result. And so we can look forward to that in tomorrow's morning session. I need to go get some damn sleep. Well, cool. I hope you all have a good one, and I will talk to you soon. I'll see ya.
See you later.